Boom. We're live. I hope, ladies and gentlemen, still with the Arcane Bear. As you can tell, we are not situated in our normal bear cave environment. I've been taking a little bit of a vacation for myself, but I wanted to go over a little bit of an update. Due to so much fear in the markets, I thought I'd try to bring a little bit of long-term perspective from the investment thesis. Now, I'm sure a lot of you have been reading all around the newspapers, and when there's fear in the market, it's usually generally a good time to accumulate. But what I wanted to do was flash back to the first time that I really understood Bitcoin. And for me, that actually, and in case you guys are wondering, we're really close to an airport right now. But I want to share with you this. This is an article from March 26, 2013. And it says, "Is the Cyprus crisis a boon for Bitcoin?" This was the first time I really started to understand Bitcoin's potential value in the marketplace. And it was through a moment of fear and something actually we're seeing very similar today. So Bitcoin was around $90 at that time, and it very quickly shot up to around 1,000. I bought more at 1,000, which was at that point now the new all-time high, which at that point made me feel a little silly, although I did get it right. The important part here is to recognize why the value of Bitcoin was soaring at that time. So it says, for most of us, and this will sound eerily similar for those of you that are witnessing today, for most of us, banks represent a trusted and safe harbor for our money. Investing in long-term fixed deposits, for example, is widely seen as a low-risk strategy. The global financial crisis changed that view for some, as it's become apparent that banks could fail, putting savings at risk. But governments, including Australia's moved to ensure deposits of those investors with large savings reacted by shifting money around between banks that spread that risk. For Europeans and the Cypriots in particular, the ongoing financial crisis has been a stark reminder that governments, as well as banks, can fail. And once that happens, people's life savings can fail and disappear along with them. Now, one of the reasons why this is so important, and one of the reasons why it was such a big seller for me, is because it really highlighted something that Bitcoin solves the problem of. Now, a lot of people talk about Bitcoin as an inflation hedge, and inflation is really a symptom and a side effect of malfeasance in governments and central banks. So it's not a direct cause. Like, inflation doesn't cause assets to go up directly. Now, they may actually appear as a net beneficiary, like Bitcoin may be a net beneficiary of assets going up in the long term, but this is, of dollars being printed in the long term, because where do those dollars go? They generally go towards assets. Now, in the past, they had gone towards assets like property, real estate, investing in businesses. But one of the unique aspects about a crisis is, let's take Uganda as an example. So in Uganda, you had Idi Amin, which is a very tyrannical, murderous dictator, effectively, that started to really push out the Ismaili Muslims. Now, the Ismaili Muslims were and the Indians, the Patel family at that time, were one of the most productive members of society. And by that I mean they owned the most businesses, they had the most farms, etc. And Idi Amin started to kind of demonize and vilify the richer class of Uganda, saying, oh, the Ismaili Muslims and the Patel families or the Indians are not like the African Americans. So they started at first by pushing the productive society out. Now, at that moment, just like when the Jewish community needed to escape Hitler's tyrannical kind of overtaking, they had no real way to remove those assets or those businesses and take them along with them. And this is such an important part about an asset, is not only is it like a functional money, but what happens if the governments themselves start to lose their credibility and people start to lose their confidence in those governments? What do you do with your assets? Now, most of the time, these people had to leave their assets behind as they fled to other countries. But Bitcoin represented this very unique and represents this very unique potential where you can now cross borders with 24 words in your mind, and you can take your assets with you. You can take tens of millions, hundreds of millions, $1 billion plus just by remembering 24 words and to make into that new country. This is an extraordinarily valuable part of the investment thesis, and this is why when I first really understood Bitcoin, it was not as an inflation hedge, but it was a hedge and inflation against this stark reminder that governments, as well as banks, can fail. Now, recently we've seen a lot of things going on in the news. The Canadian government started to freeze bank accounts of people who were apparently freedom now is a word of terrorism, but these things should scare you. These things should scare the average individual and the investor because we have seen this before. Human nature seems to have a repetitious cycle within itself. And the nature of an asset that you can carry across borders with nothing but 24 words is extraordinarily valuable. I cannot leave Costa Rica and bring my house and waterfall with me. This is a downside to owning the property as in comparison with digital physical property. I guess digital physical, yeah, physical because you can remember it through mathematics. It's trusted and verified through the technology and extraordinarily valuable because of this. So as an alternative to taking money out of the bank and stuffing under the mattress, so not necessarily a low risk strategy, it seems that Europeans at least take more a radical approach to protecting their money and removing it from the clutches of banks and governments. Well, the initial bailout was announced on March 16th. All Cypriot bank deposits were at risk. And again, in 2011 to 2013, when this started to really kick in, this is when I understood the value. Before that, when I first bought a Bitcoin at $90, it's simply because we were saving money. But this moment in time is when it sent Bitcoin soaring up to around $1,000. So what I want to do is take a look at that now. So we'll go back. Here's Bitcoin back between around $290. Sorry, $90 to $200. Let's say that so it doesn't sound a little bit of confusing there. And this is when the Cypriot crash started to take place. It was right around the end of 2013. I think it was December 2013. I have to double check those dates. And you saw this very quick meteoric rise up to around $1,000 before capitulation and a turn back down to 300. But this selling feature was not inflation. It was not a hedge against inflation. Again, inflation is a secondary symptom of a failing government or a failing central bank system, right? The degradation of the currency out of Rome was not the direct cause. It was a symptom and a side effect of these failing governments. So again, this beautiful trading range that took place between 2013 and the end of 2013, so just under a year effectively before we saw this meteoric rise into 2013, where Bitcoin now sat around $1,000. Now, what's very unique here is that here's the next bull market cycle of accumulation patterns. Now, between 2014 effectively and 2017, there was no real crisis that took place. Now, both of these were after the 2008 collapse and moving forward. And again, Bitcoin has largely been a net beneficiary of financial and economic printing because that capital has to find its way into assets somewhere. But I think the reason why I am bullish, or rather I am bullish on Bitcoin and just almost in general, I guess, digital assets that can be moved around more easily than physical assets, is for this exact reason. Governments and banks around the world, not just once, but many, many times have failed, and they leave you in a very abstract position. Take the Bolshevik Revolution when the banks were not as reliable as they are today. Not that they are reliable in any way, shape, or form, really, but the important part is to remember that as society starts to fail, they often start to aim their guns and targets at the rich or the upper class people. The Ismaili Muslims, the Bolshevik Revolution, these were not the richest people. They were just people that had visible wealth. They were attacked, and many the Jewish people as well, they had to run and leave all their assets behind. So in a state of fear or war or crisis or calamity, what do you do with your assets? Bitcoin is one of the few assets that you can store in your mind and you can escape the crisis, find a new place to live, find a peer-to-peer transaction, and use your assets again. This should not be viewed as an inflation hedge, but it should be viewed as a hedge against the failing governments, which, again, time and time again, have done the exact same thing in moments of crisis. And even more strangely, we look at everyday Russian citizens. You have nothing to do. You might even you might be a Russian with a Ukraine girlfriend. You have nothing to do with this war in any way, shape, or form. And now you are blocked from access from PayPal, from, there's a bunch of Visa, MasterCard. This in itself is a horrible government overreach, whether it's at Russia or not, that proves the point of the value of an asset that the governments cannot touch because it is not controlled by the government. It is controlled strictly by the technology. Now, again, you may make the argument, what about the on-roads and the off-ramps for this asset? And I think largely it's almost unimportant because here in Costa Rica, I guess I'm not in Costa Rica, but I'm sure here in Mexico, I could find houses for sale for Bitcoin. I could find cars for sale for Bitcoin. And all you need is one other person that's willing to trade with you. And now you have a peer-to-peer transaction. And now Bitcoin becomes a money regardless of the off-ramp. This is extraordinarily important to understand. And I want to lead with that because ultimately, whenever there's a lot of fear in the market, I think that this is a good time to be bullish. Now, if we go all the way back to where we are today, and we share our sentiment, I believe we are largely in an accumulation cycle for Bitcoin, although there is a reason to believe we could see dips down to, let's say, $18,000 or $28,000. There's a lot of reason to think that a lot of big people who have been playing this economic game are going to look for assets that are not controlled by governments. Now, why is this important? Well, fundamentally, I think understanding the value of assets and the mobility of assets, which is kind of a new class, like it's kind of harder to run around with, say, like $1 million in gold in your pocket, but it's a heck of a lot easier to run around with a few $1 million of Bitcoin in your mind. You could trade at a later date. So I thought this was important because for me, back in 2013 into 2014, when I first started seeing this stuff occur, that's what really sold me on Bitcoin, is that this was free market money out of the hands and control of overarching governments. So I do think that this is important to understand. Now, I want to nice. There's a few. Nice. Sakadosh Racing says he's actually from Cyprus, so you would probably remember this moment. Actually, something very similar happened in Greece, and a lot of Grecians ended up moving towards Bitcoin as well. So this is not just a one-off experience. Remember that the governments have failed countless times before, and they seem to do the same thing to currencies and the so-called money of those governments almost with extreme rapidity. So you're betting on something that's happened many times before. This is not like we're making stuff up that's never happened before. So I think it's very, very important to understand our past so we can make a better sense of our future. Now, one of the things I also wanted to share was our reaccumulation cycles. Now, we've constantly gone over this. I believe we're in a reaccumulation market. Even if we do come down lower, it's likely just for a spring. I do not think we are in a bear market. I believe we are in an accumulation cycle. And even if we are in a bear market, the best way to look at a bear market is an accumulation cycle. Effectively, long-term strategy beats one-time off gains. So, for instance, going to the gym or studying anything, just showing up once isn't going to make you a professional. Showing up consistently, making a strategy and effectively executing a technique can outpower leverage or brute force, right? Often jiu-jitsu is a great way to look at this. Someone who's really, really talented in jiu-jitsu, a skinny, like small, lanky person could absolutely destroy a really big guy. Now, if that really big guy gets a hit in, it may not go as well for them, but ultimately the strategy and the technique of jiu-jitsu can overpower much larger opponents. And I think this is really important to understand as well. So these reaccumulation cycles, they can take multiple years, sometimes just a few months. Again, if we go back to the Sapritic crash, you had only 300 days of accumulation before we saw the meteoric rise up to around $1,000, bringing us to a nice clean 10x out the back of that trading range. So this is where I believe we are today. I believe we are today in an accumulation range. And even though we may see a spring that, say, dips down to even, I've got just drew in $22,000 for complete randomness there before going up, it's not going to be that long. So an effective strategy will outpace almost any kind of instinct or impulse to just enter or exit the market entirely. And almost without question, a good strategy absolutely blows the doors off these kind of like, oh, I'm going to buy the bottom and sell the top type of thinking. Okay, so where does that leave us? Well, it's going to bring us to our question moment. I can see my camera's actually running out of battery here, so I'm not sure how long it's going to last. I guess I could get a little fancy, put it on here. We'll make a little bit more time for questions today, and I'll try to replace the battery here really quickly. This is going to be a question and answer moment. So we're currently only going to take questions from the private bear den. It just makes sense for us. And then, yeah, let's see. Oh, actually, my camera's telling me it's hot. This is probably not the... I'm using like a $6,000 camera as a webcam right now. It's probably not the smartest idea. Oh, and actually, I could probably even change this too. Let's just go ahead and change this so I can turn this camera off. Sorry for the changeover, ladies and gentlemen. There we go. Okay, we're just going to do this for now. This will be better. And we're going to take a look at your guys' thoughts and questions. Okay, so from the private bear den, can you please tell the viewers that if there's anyone still in two minds about joining the bear den, that it's the best decision I've ever made? Well, Ava, thanks for that. I mean, I don't think it gets any better than personal reviews like that. I know it's not a question, but hey, for any of you that are out there interested, join the private bear den. That way you can have your answers, your questions answered, or at least with an opinion of some kind. And you can also tell other people how much you like the private group. I appreciate that, Ava. That's fantastic. Too much sexy on cam. Yeah, I was heating my camera right up there. It was not. It was giving me a warning sign. I know you're not supposed to use these mirrorless cameras for that long. It's probably not good for it either. But anyways, nonetheless, we're on the road. We'll just use this camera from now on. There's only a few questions in the private bear den today, so we'll keep it short. We'll keep it simple. We'll ask a few other people. Mike Menace says, why would you want to have a coin pegged to a failing fiat? The idea of stability here is probably overrated. I'm a huge fan of volatility, and generally to the upside. You know, there's this really unique idea that let's use shorting as an example. If you're going to short, your asset can only go by 100%, right? If you're shorting to the downside, you only have 100% to the downside. Whereas if you're in an early asymmetric venture capital bet, you have infinite room for upside. And almost every venture capital firm that we've studied and looked at has exited too early. Sequoia actually released this fantastic article a few months ago. I shared it in the private bear den around how they lost $8 billion a year by taking profits too early. Fundamentally, when we make a good investment, one investment will outpace the others by orders of magnitude, and we often end up selling those investments too early. This is really important. I would at this point rather hold an investment all the way down to absolute zero than sell it at basically at all at this point. From our internal thesis, at least, is we don't sell. We do remove a little bit of risk if we feel that the team is underperforming what they said they would do by removing our initial capital, even if it is at a slight loss. But ultimately, even in my history, I'm nowhere near as big or as interesting as Sequoia. We've had the same kind of roundabout problem, which is we exited too early. Fetch, Matic, had nice, big, chunky investments in those, exited large pieces of them around a 10 to 20x, and then just to see them go on to do a 200x, and who knows where they will be in the future. This is important to understand. We're just about to finish reading a book called The Power Law. I highly suggest anyone who's interested in understanding kind of the story of venture capital go through this process. But nonetheless, taking profits, it can actually lead to a downside. Long-term accumulation, especially with things that you're really interested in, leads to much, much higher upside. And you can weight your interest and your confidence or conviction through a month-to-month kind of reevaluation of what's happening with the team, the project, and the market as a whole. So if you have $100,000 or $1 million you're trying to enter into the market, or 10 million, doesn't really matter, the number's really irrelevant here. Being early, first off, is important. Being right is also important. But being a long-term, time-horizoned investor is almost even more important, because it's very likely, I don't know how many tweets we could find where people are like, oh, I'm so glad I sold my Bitcoin at $8. It's back at $2. This is the difficult part. You see a 10x, you see a 20x, you think to yourself, this is fantastic. I did great. I'm going to leave the market. And all you had to do was walk away, be patient, and you would have outpaced almost everything else that you could have done. So I highly suggest putting reading and research on the top of your to-do list if you're an investor. It makes a huge difference. And it also allows you to extrapolate your conviction through time. Okay, let's see a few more questions here. Love you. Thank you, guys. I appreciate the support there. Good morning from California. Now we're in the live chat here. So I guess the other question here was, I want to actually, there's a part here that says, totally agree with you, Bitcoin over all other else, shitcoins or shitcoins. I disagree with this. I look at alternative digital assets mostly as venture capital. I think it's probably, you're probably underestimating the potential of something if you don't look at the rest of this space as venture capital, which A, it means there's a high likelihood of failure, but B, it also means there's a potential for an asymmetric gain, which is extraordinarily valuable. And really that's what we're looking for. We're looking for those asymmetric opportunities where you put in a little bit of capital and that capital grows by an unimaginable amount. Let's say you bought voice.com in 1998 for $8 and you kept it every year for $8 a year to renew it. And then you sold it for $32 million. So you effectively made like a $90 investment that turned into $32 million. .coms would be the effective shitcoin of today. And I think that anytime someone says shitcoin, it's just basically, well, first off, it's probably showing the immaturity of the market that we exist in. But fundamentally, change your thesis to understanding that venture capital means that there is going to be failure, right? We want high risk projects because that means they are going to be high reward when we get it right. I highly suggest the book, The Power Law. Actually, let me open that up here. It is phenomenal. If you haven't, if you don't like reading, you can also get it on Audible here. But it is by Sebastian Mallaby. I'll try to get him on the podcast. It says a gripping fly-on-the-wall story of the rise in unique, important industry based on extensive interviews with some of the most successful venture capitalists. A must-read for anyone seeking to understand modern-day Silicon Valley and the economy writ large. Absolutely wonderful read. We've both me and Iris have been enjoying it. We've been listening to it on Audible while we were driving. But again, you shouldn't look at the lower cap. Again, when we were looking at Matic, it was a $25 million market cap. What the fuck? That's a venture capital. Asymmetric upside. And if you risked just a little bit, you gained a lot. And if we failed, you only lost a little. This is why we repeat this mantra. Heads I win, tails I only lose a little. And if you keep playing that mantra and you keep increasing your conviction, your chances of success are extraordinarily high. Sokdosh says, I remember when this happened in Cyprus, and if you had 100,000 euros or more in the bank, they were gone. Doesn't happen with Bitcoin. Again, the value and the function of this technology is so that you maintain control of your assets while governments flail around like a drunk asshole. Let's see, you got a few more thoughts and questions. Are you still interested in Ethereum besides cats and punks? Great question. I'm still more interested in Avalanche at this moment. I believe it is massively undervalued by the marketplace in general. But what do I know? Just my opinion. Let's see, it says, I didn't express myself. ICOs says, I didn't express myself well at the shitcoins. The fact that BTC is transportable value without the middleman systems. That said, I'm extremely interested by the metaverse. Great point. Now, the other idea here is technically 24 words can remember your ledger. So if it's an ERC20 token or any of the other number of tokens that a ledger would hold, you can in fact store all of these digital assets through mnemonic memory. That's ridiculous. This idea that you can store assets in mnemonic memory because of mathematics is, I can leave. If the government is having problems, I'm out of here. They can't see it at the airport. I mean, technically, every time we travel, we're breaking international rules, right? All you need to do is remember 24 words. You can travel across the border. Like every time you get on a plane, you're technically breaking the law. And you're not, because Bitcoin's not a security. It's deemed a commodity. But even still, if you were to get on a plane with $10,000 worth of gold or $12,000 worth of gold, they could technically confiscate that from you. But how would they ever know what you own unless you tell them, or they drag it out of you through some pretty archaic means? James Haynes says, this guy's been single-handedly the most helpful for helping me learn the market and make good moves in investments. Well, thanks, James. I appreciate that. Ultimately, what I've done is made a lot of mistakes, and I'm trying to expedite the process for any new investor to not make the costly mistakes that I made. Because remember, I bought Bitcoin the first few times at like $90. So I made a bunch of mistakes along the way. It cost me probably an unimaginable amount of money. I haven't gone back and really taxed it all out, but it's pretty high. But nonetheless, you take what you can, you learn. I'm still young. A lot of the, and you also, I guess, focus and interest is important too. That's probably another good area to lean in, and we try to. But James, thank you for that. I'm glad you find our content helpful. Justice says, Tio, you're so handsome. Thank you. I appreciate that as well. And then another last one here says, your points are extremely great. I cannot understand people not accepting these facts. Thank you for all your hard work. I really appreciate you guys and your kind sentiments today. I just thought we'd make a quick update. Again, we could see Bitcoin drop down. It's not totally out of the cards. There's a high amount of fear in the markets, and that could push us significantly lower. Like again, I think we had targets anywhere between 18 and 20 something thousand of people getting super scared. But ultimately, what we need to remember is that the governments and the banks have failed over and over again. The story seems to repeat almost intrinsically. So ultimately, acquiring more assets whenever you can is really a good way to go, and it simplifies the process of accelerating your gains within the market. Anyways, Tio with the Arcane Bear, I appreciate all of you, and we will see you guys again on the next episode. Boom.